Hey there, everyone. How are we doing? So it's been about 10 hours or so since the Fed came out and did an emergency rate cut. I talked to you this morning on our daily millionaire news, kind of 5 to 10 minutes after I read the story, so it was still kind of fresh. I've thought all day that I'd have to do another one of these live stream. Love to get questions about it, but you know, I thought we would talk about how to invest when on one side of the table, all the talking heads on TV keep saying everything's okay, but then you see actions where they come in and they slash in an emergency rate move by half a basis point, right? 50 basis points. So I thought we should talk about it. I think we should, just again talk about actuals, what we know, and try to stay out of speculation, stay out of fear mongering. Don't make any rash decisions. At least when I made mistakes in investing, it was always emotions and usually fear, sometimes greed, but mostly fear. When I was either selling or buying stocks, I was afraid to miss or I was afraid to get burned. So I thought we should talk about it. So, first off, I think what I take from the half a point rate cut is everything's not rosy as we've been told, right? Like you, I've been seeing the news media. I've seen all the parade of talking heads on TV saying the American economy is strong. The American economy will weather this. The American economy, this, that, the other. I think it's fair to say, like we've been talking about on this channel for 2 weeks now, the American consumer, which is you and I, are changing our behavior. You don't have to go too far. You can go to Costco to see that people are afraid and buying rice and water and toilet paper and all that stuff, stocking up. You can see airports and just the reduced number of people traveling. I'm sure Disneyland is less crowded. The American consumer is afraid. Now, are they rightly afraid? That's a different conversation, and it really doesn't matter if they're rightly afraid. They are afraid, and they're staying home. They're not spending, and that lubrication, which is our currency, is grinding our economy to a halt. So, I think I think that's what's happening, and I think it's worse than the talking heads want us to believe. I think it's worse than I want to believe. I mean, you don't have to go too far as to see China's supply purchasing index or whatever it was. They reported a 34.7, where 50 below 50 is contraction. I mean, 34.7. Geez, that's bad, right? And I certainly don't think we'll have a number like that, but it's going to be below 50, right? So it's going to show contraction. And we in the US, we're still on the early part of this, right? We're sub 100 known cases. It's clearly more than that. There are clearly more people impacted. Many states, including California, where I am, didn't even have test cases. So you can't test anybody. What a joke is that? Right? California had 200 test cases for the population. I don't know what we are. Millions of people. It's just poor planning, poor execution. So the numbers are worse than were being reported. So I think it's going to be a couple of slow months. I think there will be industries where employees are asked to take vacations. I think people will be furloughed. You can already see that happening. United Airlines asking pilots, because they've reduced routes, to take a month off at reduced pay. So all of this will come back. There will be a snapback rally, but we are in conservation mode. This is conserve, relax, see what's going on, and that our currency, which is the lubrication of our economy, it's being withdrawn, and it's going to have impact. As Warren Buffett is fond of saying, we are, when the tide rises, it raises all ships. But when the tide goes out, we see who's swimming naked. And I believe there are plenty of companies who are over leveraged, who are going to be forced to sell to cash-rich investors like Warren Buffett. Frankly, there could be hotels that have to sell. Sam Zell, he was affectionately called the grave dancer for all of his investments. And if you're a younger investor and you don't know who Sam Zell is, Zell, look him up. He made billions of dollars investing in the 80s during the last really crisis of the 80s. And we could have hotels trade hands because hotels are highly, highly leveraged. And if their occupancy goes down to 30, 40%, conventions are being canceled. Google canceled their largest conference of the year. That's hundreds of millions of dollars not being injected into San Francisco or Vegas or wherever they were doing. There are hotels that are levered that are going to need help. There are airlines that will be in trouble. It wouldn't shock me if one of these airlines calls up Mr. Warren Buffett and says, "Hey, would you like to buy me?" This is why folks can't sit on Warren Buffett. He builds cash reserves for a reason. So another thing, this one frightened me. Did you guys see the 10-year note? It broke 1% today. I didn't check where it settled, but I checked midday and it was below 1%. Can you imagine getting 1% for 10 years? I couldn't imagine. And then another note that scared me, the World Health Organization, WHO, published that the death rate from this virus is actually 3.4%. So significantly above the flu, right? There's always been this talk about, hey, it's just a flu. Why is everybody freaking out? A bad flu is 1%. I believe I've read there was a flu in 1919, I think it was, that was 2%. Before, we didn't have really vaccines and that stuff back then. So this one is, 3.4% is noticeably above 1%. So not as innocuous as maybe we had hoped. Again, this number I'm sure could be revised down. And then the other thing that is going on all around this in the U.S. is I think we're sleeping on the Democratic primary. I really think, again, and it's kind of, you got to kind of look through the lens. I think about a week ago, the stock market was freaking out because Bernie Sanders, what did he win? Like 4 caucus and primaries in a row, something like that. 3 or 4, I don't know, whatever. Until South Carolina, where Biden finally stepped up. I think the Democratic, I don't know what they're called, powers that be, are now trying to put into places to corner him and keep him off the ticket. Those 2 people that dropped out both gave a thumbs up to Biden. I think others will drop out and give a thumbs up to the moderate. And the self-proclaimed socialist independent might go into the convention with the most whatever they're called. But he's not going to have enough. And then the super delegates will come in and Biden will get the nod. That's kind of how this feels like it's going. I think what will happen in the stock market is the more likely of Biden winning, the market will like that. But if for some reason Bernie Sanders starts cleaning up and crushing everybody and he gets the nod, the stock market's going to be in trouble. Just look at what he wants to do. It's pretty crazy. So again, it's pretty interesting. So when I think about what's going on in the market right now after we've had this emergency rate cut, I think it's worse than they've been saying. But I don't think it's horrible. I think as a real estate investor, this is the time you have been looking for. How many people watching this going, hey, I've been looking at my market. I'm one of your students. I'm doing my homework. I'm doing all this stuff, but I can't find a deal. You should be able to find something in the next 3 to 4 months. We're going to find out who has to sell because I really believe the owner occupants are going to sit on their hands and they're not going to buy. They're going to go, I'm too nervous. I don't want to buy a $300,000 house or an $80,000 house or whatever it is. So we as real estate investors, we are going to buy nicer stuff for less money. It's going to be a great time. I think it's the time to get aggressive. Maybe not in March, but probably April, May. right? We got to let this settle out, make sure where it's going. But as a real estate investor, I am encouraged about this because just like everything we've talked about, this will end. I don't think this is the end of civilization. I don't even think this is the end of the year. I think this will snap back. I think this will be a rocking and rolling economy heading into Q4 for sure, if not Q3. But it's going to be rough short term. We're going to find out who's been running too close to the edge, who doesn't have enough cash, who's running a bad business, who's over leveraged. This will expose some people. But it will also allow some people to buy just awesome deals. You will be able to structure some amazing things if you know who has to sell. Motivated sellers are going to be open to creative offers. So I am encouraged by what's is coming. I wouldn't have wished this on anyone or anyone, but it is where we are, and it's our job to sit back, be calm, and deploy capital in a way that is good for all of us. So I am I'm excited by what's to come. I think March is going to be pretty bumpy as we kind of figure out where we all are, and then we're gonna go, okay, so we got through it. It's uncomfortable, but let's get back to making stuff and selling stuff and being a service-based economy and all that stuff. So that's what I think. Let me know what you think about this. Leave your comments below. Ask some questions. Let's get the subscriber questions going. And of course, I will talk to you tomorrow morning. Let's see what happens. Have fun. Bye.